Hello, everybody, and welcome to another episode of the Of Impact podcast. Today is a very special episode as we just recently conducted a group coaching call on how to maximize the value of your business and prepare it for sale. Our managing partner here at Impact Advisors, Chris Bodnar, leads this call with really good strategies, insights, and practical advice to help you on your journey to successfully exiting your business one day. Chris helped us navigate the process of preparing to sell and ultimately secured our deal and helped us sell our business. So what you're going to learn today is a lot of the advice that Chris actually helped us with. Needless to say, if you're a business owner that has thought about potentially exiting one day, even if it's in a few years, there is so much value within this episode of the things that you should be considering today that's really going to help maximize that exit in the future. So dig in, I hope you enjoy, and let us know if you have any questions.
Chris, to you, like after you spend your time, you come up with the idea to start a business, you start growing it, and you kind of build that business. Like, what is the next step, like in your eyes, that takes it to kind of being able to sell your business, or what's that bridge from running your business to actually
Yeah.
selling your business? Where do you even start?
Yeah. And that time frame and that life cycle can be very different. There were people over the last 5 years, that were starting businesses that were selling consumer products on Amazon, and they only had those businesses for 2 years, and they sold them. And then there are others that have had businesses in the family for decades. But when it's in your mind, and I think it should be in everyone's mind, what is the right time frame, and what does the right exit look like? It's really starting to frame up your goals as a family, as an entrepreneur, whoever else you have maybe as partners or investors. There could be multiple constituents that are in your business, that are in your family, in a sense, as you run that company. And you can have different goals. You could have partners that have different goals. Some are like, yeah, man, we got to maximize the valuation. And then you have other people that are like, well, yeah, in the process of doing that, we also want to preserve the team. There might be some partners, and I've had this a lot, where you have people that are at different places in their careers, and they're willing to stay on for another 5 years, even if the buyer were to want that. And then you have some people that are wanting to exit immediately. So goals are key. And I would just say that that's the one of the most important places to start, is to really, and if you haven't thought about it before, just to start thinking about it. What are my values? What are my goals? What are the driving forces behind what will lead this process for me as an entrepreneur, as a business owner, as a manager of this company, and of the people that are in it? Because those things are different. You have a lot of the same themes that pop up when we talk about that, but each person, just like every company, is different, and the weight that you put on the various aspects of those goals will determine how the transaction goes. It determines how, if you think that further down the road, when you finally get to the table with a buyer, the things that we're talking about. I know, Shad, I guess to kick it back to you for a second, when you think about the exit process that we went through with your company and with Alicia, you had some goals. I remember one of which was, it was really important for us. We were willing to stay on through a good transition, but we wanted to have location independence. I mean, maybe you can speak to that a little bit.
Yeah, no, absolutely. So it was like, I mean, that was pretty much like a year for us that we really kind of determined what we wanted, and then kind of built the business towards that. And that was the big thing. We went from being completely free to being able to travel, like when we were just exclusively on Amazon, to then when we started growing it, we had our own warehouse, we had all of this responsibilities that, like, we never left the state for like 3 years because there was no time
Yeah.
to do that. So that was really
It's not
getting
kidding. We
our
didn't we didn't leave the state for 3 years. It was, yeah, the warehouse
it
day.
was absolutely, it was getting our time back. It was getting our time back, and then realizing what we had learned, and kind of like even all the mistakes that we had made, to get to that point in business. And we're like, wow, if we did this over, we could do it so much smoother the second time around. So it was the time is number one, and a clean slate was number two, because it was like sounds corny, but you almost like truthfully feel like you're coming out of high school again, like where whatever you want to do, you can do. It's like you reset, but now you actually have money to do it versus coming out of high school where you're broke or you're in debt for schooling of some sort. So it was really just starting over, and I guess that's probably one of the most rewarding things is really getting our time back.
Mm-hmm.
But
Mm-hmm.
no, that makes sense. So it's like what we did is you set those goals and you actually have to make a point. We put them on a board, and like that was our goal. We knew what we were trying to get the business to, and actually aiming and moving towards that. It wasn't something that we could just do talking about passing by, like, oh, I think we want to do this. Like we actually had to set the goal, work towards it, and work backwards. The year mark, the month mark, and quarterly, and really think about all of those pieces.
Yeah. Mm-hmm. You know,
Um,
you can
go
have
ahead.
and it's nice when you have just two of you. I mean, some of you on the call may actually be in a partnership that has multiple, constituents or managers or entrepreneurs, partners. You could have family members. And I think some of those actually have been some of my most difficult transactions is when you have family members and you have there oftentimes there's a spokesman for the group, but he isn't necessarily the key decision maker for the group. You might have like a patriarch that's sort of in the background that's sort of calling all the shots, and you have this guy that's sort of the front man to the to the advisor. But and then beyond that, the family dynamics, a lot of small businesses or family businesses, you also may have companies that have outside investors, and timing of these things and goals related to transactions are driven by, other people that aren't even involved in the company day to day. And that
That
can
makes
be
sense.
anybody from family and friends, if it's a small business like that had a family and friends investment round, or depending on how large you are, it could be a small private equity firm or
Um,
family office that owns a significant piece of the company, and their goals are going to matter a lot too. They're going to have a seat at the table.
I think that was one of the most interesting things to me. Like the more that we've done this or worked with different brands, is like how creative some of these structures can get. Like like there's the clear cut 100% sale, like me and Alicia, where we both knew what we wanted to do. But I think, I mean, you can, you can probably speak to it, but there's if you can dream it up, you can structure a deal that way with even members or even employees of the brand now or the business now were able to take it over or essentially buy it from the ownership group.
Mm-hmm.
Once I guess once you've decided you've got your goals, you kind of know what you want to do. Whether you want to exit completely, you want to become more passive, or
Mm-hmm.
essentially depending on what you're trying to do. What does a buyer look at? Like if I came to you and said, okay, I want to sell my brand or I want to
Yeah.
sell my business, what where is a buyer going to actually start looking at the brand?
Yeah. Well, and something you just said there that I think that would be really helpful for everybody on the call to key in on is that, in the process that we go through, we actually try to take as much as possible the perspective that we are the buyer, looking at the company and diligencing the company, our own clients, really putting you through the paces, because the way that buyers now look at your business can be very different than the ways that you looked at your business. You look at your businesses day to day, and those are companies that provide, income for you. They provide work. They provide work for other people. They, support other family members in the company. And you guys take and a tremendous amount of risk in your companies. And what's interesting about that is that it becomes normal to you over time. And all these areas that maybe have just become normal to you that you live with, now you have someone coming from the outside looking in, and they're going to start to evaluate those risk factors in a way that you're like, well, what's the big deal? And you're like, well, I've been living with this, for the last 10 or 15 years, and it's just the way it is. But those areas are, there's four key areas really that the buyers of any business are going to look at. And every facet to a company will fall into one of these four areas. We sent this slide. We'll just throw it up here on the screen just so you could check it out. It might look familiar. This was in the small PowerPoint deck that Alicia sent out leading up to this call.
We'll also
And
send it afterwards, just in case.
send it.
Yeah,
Okay.
we'll send it again for you guys as well.
Okay. Yeah, and these are the four key areas that every buyer is going to look at, and that every deal will have evaluated. And as we as advisors look and help our clients, these are the things that we dive deep on, and we spend a lot of time on. And depending on how much time we have with our clients ahead of time before the exit process begins, we'll spend a ton of time looking at these areas. And financials, it's pretty straightforward, but it really goes into, how clean are your books? Are you on cash or accrual accounting? Do you know what your true costs are? Making sure that your financials are clean. In some cases, we want to make sure that, how do those tie to your tax returns? And it's not to say that they have to perfectly tie. I mean, I understand what it's like to run a small business too. And I know that there's a lot of noise sometimes in the financials, but we'll take a very close look at those financials, and we'll make sure to, remove as much of that noise as possible. Because, what the key questions that any buyer are going to ask about the financials are, how does this company make money? How consistent is it? And where are the risks to that? Do you have people in your business that are doing this for you? Are they outside of your company, or are they employees? Financial is pretty straightforward because we understand that this is what's needed to grow the company, to grow the revenue, and this is how we get paid along the way.
I don't think I ever understood our P&L and our balance sheet as well as I did as we were approaching that process. And even like when, we helped my mom sell her business, like it
Yeah.
wasn't like everybody, not everybody, but a lot of people, they have a P&L that their accountant gives them, but they don't even necessarily fully understand it, or are really, really well versed in it. It kind of reminds me of a Shark Tank episode, like know your numbers,
Yeah.
and understanding that, being able to better position those, making it more clear. And of course, small business, you're utilizing every expense you can to reduce your taxable income. Now, as you go to sell a business, you're thinking about, how can I unwind that? How can I present
Yeah.
these as add backs, owner benefits, depending on the exact structure? But
Mm-hmm.
it really, really made a big difference for us because, of course, we were running everything through the business that we possibly could.
Yeah.
So just clarifying that, you're cleaning that up. Yeah. And it makes complete sense. And I was nervous because I was doing our own books and stuff like that, but going through the financial audit firms they hired and passed, flying colors,
Yeah.
it was, easy to explain, and easy. It made sense. So,
Yeah, the more
um,
structured that you are as you do your books, and the more that you can understand them yourself, and that's even if you have outside accounting firms or bookkeepers help you, to truly understand what's there. And this is one area where we can potentially uncover things and ask questions that maybe you haven't asked or had to answer before you get into that situation that Shad was just talking about, where you have a buyer that, potentially hires a third party due diligence firm, and they're now looking at your numbers under a microscope, and they're going to ask all sorts of questions that, that you weren't even aware that, things were this way. That's what we try to vet and uncover also during that process. I thought that was a really good point that you mentioned there. And then, I guess just one more thing I'll say too, with your business, Shad, you were running a business where you were selling a product, which meant that you had a lot of inventory. And, depending on how complicated that is for a different type of business, your assets, your inventory, in your case, buyers are going to, there's an area of a deal process where they're going to try and extract as much value as they can for themselves. And, what's normal inventory and working capital for a company, what's excessive, how do you run the company? I can't tell you how many deals that I've been through that the buyer would say to me, well, I hear you that like you're saying that this is more than what's needed, but the buyers clearly run it this way for the last 5 years. So why should I think that it should be any other way?
To do. That makes sense. I remember we were going through our inventory numbers and thinking about reorders and everything as we were approaching that, where it's like
Yeah.
one party you might think, oh, okay, I don't want to order any more inventory in because I don't want to put that money out there.
Yeah.
But then like a buyer's going, if you don't have it, then it's going to be a negative for your business if you can't actually. They want a smooth transition. They want a smooth handover, and like
Mm-hmm.
I think you helped us a lot going through that phase of actually projecting inventory and building the model out looking forward. We operated for 6, 7 years. I don't even remember how long it was. Never once did we ever say, oh, what's the next year going to be? It was like, we can see this far ahead of us, and it's like you try to plan the next products, but you didn't actually formalize that, build that roadmap, build that entire,
Yeah.
kind of the runway out ahead of you, what that would look like.
Yeah, and
I
you
know.
sold a lot of different types of product too. And so, understanding how fast those turned, what was stale, what's a buyer going to see when they take a peek under the hood, and what can we reasonably sell as a huge, as the assets of this company.
So that makes sense. I know 100%. I know the next one is human resources, and for sure that was one that we were weak and struggled on. Like it was, we were kind of proud of the fact of how we had 2 to 4 people working for us at most, but
Yeah.
like how lean we had the business. But I didn't realize what all went into that from the buyer's eyes. Like what are some of the major benefits that you kind of see, or kind of like areas
Yeah.
in the HR side to focus on there?
I mean, anybody who's run a company for any amount of time will say, and that needs other people to do it, will say it's usually one of the most, I'll call it difficult. I mean, difficult is relative. Time consuming can be relative, but managing other people can be a challenge, especially, people that aren't necessarily that have the same incentive that an owner does to behave in the company like an owner. So, I mean, that in itself is just a characteristic that is difficult to create. But one of the biggest questions, I think that I always like to focus in on with our clients is, how independent can this company be without you, the founder, without you, the owner? Because if you can't step away from this operation and have it continue without you in relatively similar fashion, then, it's not really the asset that you think it is or would want it to be. It's in a lot of ways, a job. And that's okay because a lot of businesses start out that way, but the ones that transition to having founders that, you can bring in people that are running the company, running different facets of it, so that you're not the one that's always, pulling the levers, pushing the buttons, is what will convert this into a true asset for you that you can transfer to someone else. I mean, that is a huge piece of it.
That makes sense. That was definitely the biggest area we struggled with, and as we were approaching the sell, really had to improve on, because it was everything her and
Yeah.
I, and we never really asked the question or had the solution of, well, what if we step away? And it makes sense, you're thinking about an accountant, for example, like
Hmm.
the knowledge is in his brain, where the proper business, it should be like standard operating procedures, and where somebody could step in and pick it up right where the day you walk out.
Well, yeah, and I mean, think about your situation. You were so you created a lot of value because of the work that you did in the business, and you saved a lot of costs because of that too. And I think what you just said is kind of relevant. You don't necessarily have to have implemented all these solutions by the time you hit the sale process, but to have the answers, I think, is good. So like in your case, where you guys were managing your warehouse yourselves and doing all that work, being able to understand what it would look like to transition to a 3PL, a third party logistics provider, what the cost would look like for that, how that integrates into the numbers of the company, and how that would impact the valuation from the buyer's
Right.
perspective. I think that was a key piece.
Exactly. Or we didn't have to give up the margin, but the day they bought it or, buy a business for
Yeah.
that was our number one uniqueness where we could just flip the switch on a 3PL. We had vetted it, we had planned it, we had strategized it where, that made it be very
Mm-hmm.
beneficial for the buyer.
Yep.
Um, I know legal contracts, and that's the next one. Talk a little bit about that, where like we kind of initially thought, well, we didn't have any legal contracts because it was kind of a whole
Mm-hmm.
different ballgame. But there's a lot more that goes into that section that a buyer really
Yeah.
is going to comb through.
Mm-hmm.
What
Yeah.
go ahead, sorry.
Oh, no, it's okay. I mean, I call them legal contracts. It's probably legal and contracts is maybe a better way to write that. You know, when I think of this, aspect of the company, I'm thinking anything from, do you have contracts with your employees? Do you have contracts with outside vendors? Do you have contracts in place with suppliers to your company, whether it's raw materials if you're in manufacturing, or if it's a manufacturer, if you're just in a consumer products business and you're bringing in different product and pieces? Do you have contracts in place with customers? I mean, that's a huge one actually, and the stability of those contracts, depending on the type of business that you run, allows buyers to project that into the future and understand how stable the business is, how stable the revenue is, and when they can expect that to change, and what your sales develop and business development cycle is to bring on new ones for growth. So, those are all contractual situations within the company. And those all, I think, need to be vetted, highlighted. Do you have major concentrations related to those parties? It's not uncommon for small and mid-sized businesses to have major concentrations, so it's not really always a bad thing that you do. And then, it can also include things like, are you leasing your trucks or your, other vehicles or other machinery in the company? Do you have a lease for the office space or for the warehouse or whatever type of facility that you have, and what that looks like? How transferable is that? When is it up? What does the renewal provision look like? Is there other space? What other options are available for a buyer if they're planning on growing this thing? Because honestly, that's one of the biggest reasons why someone's going to buy your company, is because they believe they can take it from you and improve and grow it.
Right.
So those are a smattering of examples of contracts and legal.
It was the one thing I found interesting too. It was even wasn't a legal contract with some, but it was even the relationship we built with the suppliers and the
Yeah,
manufacturers where we didn't just start working with them yesterday. We had worked with them for 5 or 6 years, great credit terms, great stuff like that, that really can make that a business more lucrative or more sought after, where
yeah,
there's a relationship there. Maybe it's not a legal contract, but where, that's been built and tested kind of
sure.
over time.
Well, and
Um,
then one other thing before we move off of that, just is the legal aspects of the company. Like, have you ever been sued personally, or has the company ever been sued? Again, like, it's not the end of the world if you have, but it's nice to know up front, and it's nice to understand what the resolution is there. Do you have intellectual property that's ever been challenged? Those are legal matters that are good to consider and good to have kind of buttoned up in the process. Yeah.
the the last one of the four is kind of the overall market. Talk a little bit about that. Does that like the stock market? Is that what the headlines are on CBC, CNBC, or
Right.
I think that's a big thing where people they try to you know call the market for themselves. But what do you see there, or kind of talk through that a little bit?
Right. I mean, when I say the market, I'm really talking about all the things that are external to your company. And that involves, it can be regulatory risk and regulatory matters. It can be various financial matters that are going on, like, what's the economy doing right now? What's the what's debt, and what are banks predisposition to lend right now? How is that affecting valuations? What do we know about the fundraising that's going on in the private equity sector, and what we read. I do a ton of reading, and I guess just, being in the market for so long, just about understanding what, who's raising money, who has new funds to put to work, where that's coming from. And then, all that reflects on what what are valuations doing in the private asset market. A lot of times you see that mirrored in public markets, but not necessarily all the time. And our investors taking on risk. Each one of your businesses out there falls into some kind of a subsector, uh, a broader sector, and then even drill down into subsectors, and what are characteristics there. I know, Shad, when we were selling your company, and even some of the work that you've done now after selling, are in industry verticals that have very different valuation profiles because of the types of companies they are, and the types of products that they sell.
The one thing that stuck with me, and I know you just recently closed a transaction, even though interest rates are high, but there's always money available for the right business. If the
Yeah.
business is healthy and set up right, there's always funds and opportunity out there, for
Hmm.
that individual business.
Yeah, that's what
Um,
I say. Like, just say it again. The best businesses are bought; they're not sold. I work with my clients. We work with our clients to sell their companies when the time's right. But it's really to position them in a way that they are viewed as the best businesses, because the best businesses are bought. They're assets that are desirable to other investors, and to the new owners. And I think that speaks to what you were just saying, is that even in a situation where you might have, you know, like you said, turn on CNBC, you hear soaring inflation, the Fed pondering what to do about interest rates, investors are, hesitant about what, this or that, potential war on the horizon in the Middle East, whatever. There's tons of dry powder on the sidelines, and there are people that are willing to take risk. I mean, even just, I'm sure on the call, a lot of you are familiar with Warren Buffett and Charlie Munger, where they say to be greedy when others are fearful, and fearful when others are greedy. And there is always a market, I think, for the best companies.
that makes sense. Go. We had a bunch of questions submitted before. Most common question is valuation. How do they come up with valuation? Where is that at? Can you talk a little bit, kind of give your opinion on, valuing a company, what that looks like?
Yeah, it's, if you go online and you do any kind of searching, you're going to find different ways that you can value a company, a private asset, a small business asset. Different types of assets have different ways of being valued. If a lot of the entrepreneurs that I work with also own real estate, and they understand that that has a different methodology. And there's nuance to it, which isn't surprising. This isn't like we were just talking about public markets. You're not trading shares of Amazon or Shopify or other, big businesses where you can look at a stock chart and see it going up and down all day. But there's nuances to valuation, and it's as much science and as it is art to understanding, because the factors that go into, and I would say the weighting of the factors that go into evaluation aren't just numerical, from like a, multiple of this applied to, this amount of earnings, or EBIT. It's as much about the other things that we were just talking about, like how much perceived risk is there in the company because of people, because of contracts, because of financials. How much perceived risk is there related to the regulatory framework that the company operates in? And those things, how much perceived risk is there because the owner has all these relationships with the manufacturers or the other suppliers, and not only that, but all of his employees, so that when he announces that this thing's going to get sold, we have a flight risk from everybody. So those things all affect valuation. And it's not as easy as just applying a multiple to, an earnings number, a net earnings number, an average earnings number, but it's perceived risk, and the way that investors look at that.
And that's, that was our number one question for sure, was like, how much is it
Yeah.
worth? How much is it worth?
Right.
But I think that was like actually meeting with you well ahead of time and kind of strategizing, planning that, and getting an understanding of, as we move certain levers, what actually could push that valuation. Like, where you took an entire look at the business and said, well, if we can focus on improving area A, B, and C, where we can actually push this valuation higher, I think was something that was very educational and beneficial to us, because we
Yeah.
spent 6 months actually developing that, following kind of those things, and then inevitably we sold when the time was right.
Do you remember, I mean, since you brought it up, how much time you think there was between when you first reached out and we started working together, and then when the deal finally closed?
I
Was it
think it was,
like 2 years or
yeah, I was going to say probably a year and a half at
year
least.
and a half or so?
Hmm.
Yeah.
Yeah, which
And
it was. Yeah, I mean, it was, some of that time it was growth, and some of that time was actually then fixing old mistakes and getting the financials right, and then it was also kind of, we saw the growth, we saw the push in valuation the year over year, so we held on until, you certainly didn't try to call the top, but we held on to where we thought, okay, you know what, we've really, over the last year specifically, we had increased the valuation by X amount.
hmm
We're ready to walk. We've hit our targets, we've hit our goals. We're ready to walk away at this point.
do you, I guess both of you might have a different answer, but your perceived timeline of what you thought it would take to get the company ready to sell and then also get it done
Chad and
versus
I,
what,
yeah,
yeah.
we were very, I definitely had different expectations in what was involved, and, wanting to get our time back. I really thought it would be like a just quick 6 months. So it was like a good reality of like, okay, there were a lot more steps involved of all the things that we could do to best help our exit, that was like exciting to learn, but you're also like, oh, it doesn't, you don't sell it the next day. It's a preparation to prepare it to sell, for sure. Or
Hmm.
Yeah, it
I
was.
don't know if you were the same way, Shad, if you thought it was quicker or.
Yeah, because the only comparable in my mind, we sold $20 products, never sold multi-million dollar business. It was like, oh, it must be like a house, right? You put it on the market, and then like, you just see, it was a lot longer than what I thought, but it was actually faster when we said, okay, we're ready to sell. That was
Exactly.
actually
That was quick.
faster, because everything was ready when we actually went to market. I think the
Yeah.
first week when you said, hey, this is good to go, you tell me when. Maybe a week or two later, we were discussing offers we had on it. I mean, maybe it wasn't that quick, but it felt like, wow, this is really happening,
Yeah.
like this. But it was just the
Mhm.
prep time really leading up to it that I,
Hmm.
I truthfully I didn't anticipate, but we had never sold a business before. So,
And I think what you're really speaking to there is that the necessary time that it takes for someone who's going to assist you in taking you through that exit process and selling the company, basically, what I do for my clients and and what I did for you, it takes a minute to it takes a bit to actually be able to assimilate all that information and own it and speak to it like it's my company, because that's what you really need, is for me to be able to speak to their questions, reduce their perceived risks in certain areas, be able to speak very clearly about and know the company, kind of inside and out, not just to prepare the marketing materials, but to actually have those conversations. Because I think I wasn't really planning on getting into this on this call, but the reality is that, if it was on you to field every single one of those calls, knowing how much work that you were involved in your own company, you wouldn't have been able to continue to run it like you needed to keep the performance, up, and to keep,
so
running it like you weren't going to sell it. And so it takes a bit. And so it usually takes a little bit longer and more preparation, more time than anticipated.
Mhm.
Absolutely. I see, just to be cognizant of the time here, see, do you want to open up to any questions, Alicia? You want to
Yeah.
start?
So thank you guys all so much for submitting questions. I know, Jim, we got your question. If you want to workshop that, Jim asked Chris, let me pull this up for you, Chris. He asked about his architectural consulting firm. He says, my son works for me and will eventually buy
Oh,
me out.
cool.
My questions are, how do I establish my company valuation? And two, how would I structure the sale? And there's more information on there, but I'll let Jim and you work through that.
Yeah, that's really great. It sounds like it's an architectural consulting firm. You have a son in the business with you, and so, you know, services firms are interesting in themselves and they transact quite a bit actually. And I think that one of the key pieces, knowing that it's a family situation has a nuance to it all in itself. But pretending for a minute that you weren't going to be selling it to a family member, transferring it to a family member for consideration, the things that really stick out about a services company is how much visibility is there into the pipeline of your clients, and how frequently are you bringing on new ones, and how long do they remain paying customers. So like you might have real estate owners, commercial real estate owners, and developers that you work with that you've been working with for years, and they just keep coming back to you. And if you're able to point to that track record and others like that, depending on how much of that makes up your business revenue, you can justify a higher valuation versus other types of businesses that maybe are just churning through their clients and getting new ones every whatever 6 months, 3 months. So I think the stickiness and the length of the relationships that you have, and the visibility that you have into the future of for those relationships are a key piece of the valuation. It would make it higher in that sense. And then the second piece was it like how to structure that transaction with his
Yeah, how to
son?
structure the sale.
Yeah. When you're dealing with family, a lot of it comes into family dynamics. I've seen I've seen it done a couple ways. I've seen it done where like parents are transferring to their children over time, and there's going to be a buyout, and that buyout occurs through the passage of time. And that can be, in lieu of cash consideration that they would otherwise be getting. There can be a transfer of the ownership units. It depends on what type of structure you have, whether it's an LLC or a C corp.
Yes, bro.
An S corp. Okay, so it's probably an LLC structured as an S corp. So you have membership units, and it's probably owned certain percentage by you and if anyone else. You can transfer that over time instead of cash consideration. You can do it in the form of a seller note. You can just, if you're just ready to punch out and go, you can do it in the form of a seller note. And you can even do it in the form of SBA financing. If you've heard of that, the Small Business Administration through banks around the country are willing to lend on the value of the business. And in many cases, when you have partners, uh, I don't know if he's necessarily a partner in the company with you yet. A lot of times it's with partners. Okay. They will do 100% financing. Actually, the SBA will, to buy out a partner. But in this case, it may just be more, it just depends on how things are structured and what they see. His readiness to take over for you would also impact how much they would be willing to potentially lend, if that were preferable. A lot of people have their own views on debt. So those are different ideas that come to mind when it's a family situation. I mean, was there any follow-up on that you potentially had?
I'm not necessarily interested in getting the highest. My big things are that I want to make sure it's sustainable, where he can,
Yeah.
he's not paying me so much that it drives the business into the ground. We have a lot of clients that have been long-term clients, so I think we stand really well there.
Yeah.
That'll continue to work with us after I'm gone.
That's good. That's good. Yeah. And have they gotten to know him already?
Yep, yep.
Yeah. So that's huge. That's a huge piece of it. So your transition out, I think, is a big piece of it. And I do think that, for estate planning, I mean, I'm not a financial planner or a CPA, But I know that for estate planning purposes, it's also very good to have these things in writing and to have them documented. Yeah. So that's
Yeah.
what I would kind of speak to that. We could follow up more later too if you wanted.
Awesome. Thanks so much, Jim. We appreciate having you here. Let's see. I know Robert. Hey, Robert, how you doing? I know you just submitted a question if you want to workshop that with us as well. Let's see. Robert asks, this is obviously a big deal, selling one's company. What methods should one use to decide who will get the highest multiple for our company and the right time to sell? Is there anything, Robert, that you would like to add to that or say differently for Chris?
Yeah, sure. Hey, Chris,
Hey, Robert.
and thanks, Alicia, and Shad. I appreciate it. Yeah, I mean, obviously, this is probably a very common question, Chris, right? Like, is it person dependent, connections dependent on the person? Is there that element? How do you look at that?
For valuation in particular, I think one of the best things that helps if your goals are to achieve the highest valuation possible, which, most people are, is to have it be a competitive process. I mean, that's just the biggest thing that drives valuation up, to be able to have an advisor or you on the other end going, I've got someone else willing to do this. The other things are that I've found over time that are important is not to lead with an asking price in the market. And I think that that's a big piece of it, because valuation is perceived differently by different parties. And I think that's kind of what you were alluding to. So depending on the type of company there is that you have, or that others have, a strategic buyer oftentimes will view things about your company different than just a pure financial buyer will. And that's why, strategic transactions often yield a higher valuation, because they can see synergies in revenue, synergies in product lines and in customer lists, and also in expense reduction, quite frankly. So, but making sure that you're not leading with an asking price. Now, I say that, but invariably, every single time I get on the phone with a buyer, their first question is, what are the seller's expectations of value? Because I'm not going out with a price, but they want to know, what's it going to take to get this done? And at that point, it's really just a game of cat and mouse on my end to get them to blink first.
That's funny. I actually have that one really sticks with me because, me and Alicia talked about it because you obviously did that same model with us. But then I helped my mom sell her business, and she had them three of them since 96. I mean, it was a pretty good size. And like me and her accountant kind of went head to head on that, because her accountant was like, that's the stupidest thing I've ever heard. And I'm like, it works, trust me. And my mom, of course, followed my guidance, and they made an offer to her far beyond what the accountant and what they would have valued it at. Like, we discussed what we thought it was worth and, that sort of thing. But rather than saying this is what we want for it, we let the buyer essentially put a value on it. And then, of course, we could have negotiated it from there. And I'm like, 100%, it worked for us. It worked for Alicia and I.
Yeah.
It got us, more than what we would have asked. And like I said, I saw it again when we sold all three of hers, where it was like, do I call the accountant and say, told you so? But
Yeah.
we just let that one go. But that was a different approach that I didn't hear when we interviewed people initially. But it really, really, that's one thing that really, I think was a fantastic idea.
Mm-hmm. Yeah, thanks.
Do you have any follow up on that, Robert, or any other questions that you got there? And then I know Abraham's got one submitted here that we'll go to next.
Yeah, and if you guys have extra time, I have another question, but it's not required. No, this is interesting. I mean, there's so many variables. I'm trying to like go around the variables that exist, but how do you, have you guys even thought about, or have you ever done any deals, Chris, where you're buying a company for the company before the company sells to increase the value of it? You ever do anything like that? Did you ever explore that with Shad?
Yeah, we didn't do that in their case, but I've done that through the years, and some of them, they're buy-side engagements, they're strategic business development. I did that when I was with the Hartford. We were buying lines of business and other independent companies, but it's a roll-up strategy. And it's kind of interesting how you can have businesses potentially come together before a broader sale. But what I would say I've seen work in that scenario is that you have to have one seller being willing to sell it and to walk away from it and to, I guess, relinquish control and to establish for himself what valuation is acceptable in that scenario before the surviving entity and the larger winning entity can take that and do with it what it wants to then create the value to sell it for more. You know what I mean? Just bringing, like, I've seen so many situations over time where you have two similar businesses coming to you at the same time. And my thought is, well, wow, what if I were able to just sort of put these two together, even in a similar deal process, and sell them to this buyer? We might be able to get more for everyone. But it's not like taking two, of the same type of car, it's just they're different. Businesses are just fundamentally different, especially at a small business level. Thanks, man.
One of the questions, even maybe a little bit even on those lines, Abraham submitted in the chat here, Chris, is it's a franchise in the non-medical home care space.
Okay.
The usual valuation is for their business is based off of a multiple of EBITDA, but they're looking at their current franchise in a potential new territory. So he's wanting to know, I'm assuming you can maybe elaborate on that, but with adding probably more franchise locations, trying to maximize their value over the next, say, 5-year horizon.
Okay. And Abraham, are those existing businesses already that would you be taking them over, or would you be starting them in just different locations? Or
there is one that is already established. It has been established for over 12 years.
Okay.
In the Austin, Texas area.
Mm-hmm.
And one of our ideas is to expand into a territory in the DFW area. Usually our business, because thank God it's not covered by any governmental source.
Okay.
We try to go into demographic areas where there's a high population of folks over 65 years old. That's our niche.
Okay.
With the highest disposable income ratios around.
Okay.
So we have been looking at that, but obviously, we'd like to be, out within a 5 to 7 year horizon.
Okay.
And see how we could scale that. And I love the conversation that Robert had right now in reference to a roll-up type scenario to then, raise that as at least the last year or the year before the valuation or the actual sale, comes through. So I'm interested to listen about some ideas about that.
I think though that market in particular, I don't know specifically the type of medical treatment that you're doing in home, and it's okay that we don't talk about it on this call, but like having a geographical focus that has multiple locations, I think does add value there, and especially in the healthcare setting where home health, and even I would extend that to home hospice, is becoming more and more important over time to keep patients and to keep people in their homes and in their comfortable environments longer. Now, and you also touched on reimbursement risk, where you don't necessarily have the government payer for these older type clients, whether it's Medicare or in some cases Medicaid paying you. So you have, more self-pay clients. I just think I think you're wise to be thinking geographical expansion and just having those businesses be as standalone as they can in those markets. I saw that happen a lot. I was an institutional investor, and I saw that happen with the home health market and also with radiology, with urgent care facilities, and the private equity market scooped them up, and their business model was to scoop them up and take them public. Their dialysis was another area where they did that. So I think that this could be really big. Home health infusion therapies is another one where I've seen that work. And geographically, though, is what I think we're getting at. But with your question, is a big piece of making that attractive to an investor. Was there any follow-up on that, or am I hitting what you're asking?
No, I think you're hitting, the generalities of what we're thinking of. Like I mentioned, our agency is a non-medical, okay,
Right.
and it's that, we're basically a staffing agency, if you will,
Okay.
where we dispatch caregivers to attend to the folks that need assistance
Oh, nice.
in activities of daily
Yep.
living.
Okay.
Okay,
Yeah.
companionship, that kind of stuff.
Oh,
So,
wow. Yeah.
long-term care insurance does cover that, and we have
Yep.
a big mix of that, which is very helpful.
Yep.
But and I think there's opportunities to do some higher end contractual deals, if you will,
Sure.
with some of these long-term care insurance providers
Yep.
to basically drive business our way as well.
Yeah.
But we're not there yet. But it's a noble business. The bad thing is, the good thing is that we serve folks over 65 years old, right? The bad
Uh-huh.
thing is that unfortunately a lot of those folks die,
Yeah.
and we care for folks alongside hospice agencies and
Mm-hmm.
home health agencies and infusion therapy agencies as well. So
Yeah.
it's kind of like a combination of things, but I think that's the idea, that we want to scale it to a point where the margins are really, really good, because really
Yeah.
we have zero assets,
Right.
but it's all a transactional business
It's a
where,
pass-through. Yeah.
yeah,
Yep.
the caregiver gets $18 and we charge $30.
Yep. Yep. It's a great business model, and there have been public companies that do the same thing. And so when you're dealing in occupational health or other types of home health, I think it's a great model, and it's going to become even more vital. I see that also in things like speech and language pathology, occupational health we mentioned. So I think it's a really good model, and geographical focus is, I think, a key piece of that strategy.
Yes. Thank you.
You're welcome. You're on mute,
Yeah,
dear.
you're muted, Delicia.
Thanks, guys. Thank you. Yeah, I see we're at the top of the hour here, so I just want to let everyone know we can stick around a little bit longer if some of you guys have some more questions you guys want to go over. More than happy to.
Yeah.
But I wanted to drop a link in the chat for you guys. I'll also email this to you. It's a link where you can schedule a one-on-one with Chris, so that he can evaluate your business one-on-one and kind of have that discussion with him if you guys would like. I'll also send the email with the follow-up on that as well. Chris has put together a really helpful questionnaire that I don't know how many questions there were exactly, Chris, but just questions to kind of ask yourself that really helps you get clear on the goals of selling your business. So I'll follow up with that questionnaire as well as this link, but feel free to book a call with him anytime soon. He'd be obviously more than happy to chat with you guys more one-on-one. But yeah, that's really, if you guys have to go, we appreciate you guys' time so much tonight. And like we said, if anyone wants to stay, we're more than happy to answer a few more questions.
Yeah, I'm happy to stick around if there's anything else. For sure.
Did we have, I know, Robert, you said you had another question that you wanted to maybe go over, or was there any other ones?
Yeah, appreciate that. I don't know if any one of you three want to approach this, or all three, but did you guys have a board of advisors or trusted group of people, just even informal, maybe a board of directors, and then how do you think about putting those people together? I have a lot of options, and I'm probably overthinking a little bit about the the energy, the type of energy I want in a board of advisors, the type of people I want to advise me. I have a bunch of different types that are really smart, but I wonder how you guys think about that and selecting, just 2, 3, 4 people.
I've got some thoughts on that. I guess I can start, and anyone else is welcome to add on. I think independence is a big one. Accomplishment. I mean, obviously, people that you believe can add value to you and to the organization. Different perspectives. I mean, it doesn't, it's not just cliche, right? I mean, when you're talking about one of your greatest assets, you know, you really do value differing perspectives. I think one thing that board of directors also bring is it's meant to have accountability, which is good, you know, and that can help in a lot of ways, even if it's just optically. If you have that on a website, that you have a board of advisors, you can maintain to certain constituents that you have customers or other different types of investors in your business, that, you know, we have this oversight and accountability. But I think one thing that you always want to make sure that it doesn't bring is like a convoluted sense of control, and that you maintain control. And that's something that I find in transactions gets difficult, is when people have too many cooks in the kitchen kind of, and there needs to be a buck stops here kind of person. I don't know if anyone else would add to that.
No, that the only thing I was gonna say is the control. Is truthfully like
Yeah.
you said it 100% right there. Because if it's good to have support and you know, like the positive team around you, but it's got to be clear who the buck stops with. You know,
Yeah.
that would be my biggest suggestion as well there.
What about an advisory board instead of an actual board, where it's more of a, you know, help us out in growing our business rather than having actual, I don't want to say responsibility, but
Yeah.
more of a helping out the business, so to speak, with their connections, etc. I'm just throwing that
That's
out.
a good idea. That's a good idea, you know, for everybody on the call to be thinking. I mean, it almost feels kind of self-serving or selfish to think that way, but honestly, you know, unless you're running a nonprofit or, you know, some other type of group that isn't for profit, you know, you really do care about that. And it's a part of growing the company, and you should maximize those relationships in any way you can. So that's a really good point, I think.
Yeah, it's very true. If you can get people that are willing to help you grow, and it's tough sometimes, I think, with business, you know, maybe in personal life you rely on your friends and family, but they're not always business wise or business smart. So if you can find the right group of people, I think it can be, you know, really enjoyable and really beneficial, because there's a certain level of either a business owner or somebody in business that just wants to help others succeed. Like
Yeah.
it's not going to take away from me if I can help you succeed. Some of our partnerships now and or deals or things that we work on, they all started that way. It's
Yeah.
really based off the team, and it's developed into, you know, very successful.
Well, and there's
business.
been like, that's why people go on Shark Tank, and I've actually had some of my clients that have actually been on Shark Tank. And so the relationships that they get and the distribution relationships from them becoming not only investors, but in a sense advisory board and board members, it helps them, you know, grow the company. You would have done well on Shark Tank, Shad.
We
Actually
watched
didn't know
enough
that
of it.
about you. I know we watched a lot of Shark Tank. I never knew
Yeah.
that about you, Chris. That's cool.
Yeah, yeah.
Good Shark Tank
It's
client.
weird to be able, you know, you have like this agreement. You talk about contracts. There's like this deal that they have with Mark Cuban or Mr. Wonderful, you know, and you have to actually deal with that as part of selling the company.
That's funny. Yeah, I
Yeah.
never thought about
Yeah.
that. That's really interesting.
Yeah.
Well,
Very
cool.
cool.
Does anyone have any other questions for Chris? It looks like we are good to go. Well, cool. Thanks so much, Chris.
You're
That
welcome.
was such a great call. I really
It
feel
was a
like that.
privilege.
Yeah, that was really great. Just as a reminder, this was recorded, so we'll get it published and sent to you guys so you guys can recap whatever you guys need. And then just keep an eye out for the email that will have the questionnaire from Chris, as well as the link. I put the link to book a one-on-one with him inside the chat, but it'll also be in the email if you guys are interested in chatting with him a little bit more one-on-one. But yeah, thank you all so much for your time tonight. It was a blast.
Yeah.
You
Have
did
a good
great,
night,
Chris.
everyone.
Thanks, everybody.